Good morning, everybody, and good afternoon. Thank you so much for joining us today for our continued webinar series. Today's topic is how to qualify more first-time homebuyers. So let's get going. As always, I'll go ahead and read our disclaimer. The content of this presentation is proprietary and confidential information of Home Express Mortgage Corp. It is not intended to be distributed to third parties not participating in this webinar without the written consent of Home Express Mortgage Corp. And we thank you once again for your support and understanding. Today we have a pretty short agenda, although it looks like a lot on this slide, but we want to be cognizant of everyone's time. So we'll go ahead and get started. We're going to talk about the mortgage market today and then looking at qualifying more first-time home buyers in this environment. As always, I'd like to thank our panel for attending. We have David Greider, our SVP of Wholesale Lending. My name is Andrea Formato. I'm the Sales Training Manager here. And we have Ray Menina on, who's our SVP of Strategic Initiatives. So Ray, I'll turn it over to you for a couple of words.
Great, thank you, Andrea. And again, welcome to our ongoing monthly webinar series. These webinars are geared towards providing you relevant market updates, as well as product information that will better equip you to capture more business. But first, about us. Home Express started in 2015 as a specialized non-QM wholesale firm dedicated to serving mortgage brokers. The company was founded by seasoned executives who truly understand non-traditional loans and are committed to serving borrowers and investors who may have unique situations that may prevent them from qualifying for a traditional loan. We're proud of our evolution from a humble startup company to one of the top non-QM firms nationwide. Much of this growth is attributed to market demand for non-traditional products. However, we've also accelerated to the top of our peer group because of our no-nonsense underwriting approach, our industry-leading pull-through ratio, and our enterprise-wide focus on speed, ease, and convenience. Once again, our presenter will be David Greider, who is our SVP of Wholesale Lending. He'll walk you through some of the unique characteristics of non-QM loans, and more importantly, how to qualify more first-time homebuyers. As a bonus, he'll also talk about current market conditions, which I think is it has everyone's curiosity at this time. So without further ado, David Greider.
Hey, thank you, Ray. And I thought it was important. We start these webinars, some topics as we go through the year for every month, and one of my topics was, hey, the mortgage market today, how big the purchase market is, and how low, how the refinances are really faltered off from previous year. And I thought a good topic would be is, hey, how do we qualify more first-time home buyers that go into space? And then, with some of the market news today, I think I need to address that first. So, which I'm going to do, right? Some of the things that you've seen, read about, some other non-QM lenders. So I want to kind of address that up front. And if you guys have questions on non-QM, I'll take them right now. So if you want to put them in chat, is put down, hey, what's going on, non-QM? Tell me a little bit more about Home Express, right? Because the last thing I want to do is go through all these programs. Here's what we have on your first-time home buyers, and have you a little nervous. Are you going to actually honor your lock, honor the guidelines you have today, and fund that transaction? And I'm going to tell you the answer is yes. But I wanted to talk that, so I'm going to kind of do a high overview how I'm seeing the mortgage market today, how the inflation's affecting it, how the spreads have done on some of the bonds. And kind of remember, if you went to our website, we have all our webinars recorded. And remember, and I was talking to Andrea and Ray before this, and we did a webinar, what to look for in a non-QM lender, right? Okay, maybe, and I had all these steps to look for, because at the tail end of last year and the beginning of this year, there's a big switch to non-QM. You saw all these entries into it, and you had some ones that have done it for a while. But what does that look like? What kind of products they have? Are they tested on it, right? So when you approach the mortgage market today, there's been a lot of things that have happened. Unprecedented, quick rise in rates, right? And how do you navigate that? Well, you need to have a company that's kind of tested through that and gone through that. But one thing we've done at Home Express, we recognized beginning of the year that rates are going to rise. And so we didn't want to carry big balances. So we went every couple weeks, just making sure they're off our lines and moving up rates accordingly. What happened during that period is we're able to honor our locks, right, all the way through that period. Now, did our rates go up every 2 to 3 weeks? Absolutely, because that was the market, right? But as we navigate through that, now we see rates kind of more stabilized, and I really kind of stabilized. They're up there, even though we had a small rate increase, I think, beginning of the month, but we kind of know where non-QM is at. And now we're looking at the market as a credit perspective type of look at it, because we're here you're our customers that are on here right now. We want to make sure we take care of you today, tomorrow, next year, the year after after that, the year after that. But also our customers are investors. Those are aggregators, could be all kinds of different investors, and ultimately the bondholder that's dependent on this mortgage industry for predictive interest income, right? That's what this is about, and we can deliver that through great core, non-traditional, non-agency loans, right? So back in 15 and 16, when we started Home Express, there was a certain profile of borrowers out there where traditional financing was not available. Maybe they wrote too much on their tax returns, but the profile of borrower was great. 700 plus scores, right? They had money down. So you're talking 70, 75 LTV, and they had reserves, but they didn't have anywhere to go to get those loans. They had to go private money, saving up, do it cash, be more creative. And this is an outlet for it, right? So some of the challenges this year are probably going to be getting back to that core loan. Some of the fringe products are not going to be there, right? When I first started, the highest LTV we did was 85 on a purchase. Well, that's where we are today, 85% on a purchase. There's a few still out there advertising 90, right? But really it comes down to non-QM was developed for a lot of the self-employed borrowers who didn't pass the liquidity test on their tax return. Maybe it had a great CPA. Maybe it's a small to medium true investor that understands cash flow, not any first-time home buyer buying investment property, right? So it was really meant for that. And we're able to navigate that through our credit department and through our secondary to make sure we have products that are out there for you that you can have confidence in. And I tell you that we honor our locks and the programs that you submit that loan on, and you have choices to lock your loan. You have 30 days, 45 days, and allowed a 15-day extension. And we want to make sure that is. So as you see some of the HPA concerns, I do think it's probably more pocket driven in certain areas than nationwide because there's still a low inventory, and it's a need-based product in non-QM. You still have people that need to buy homes for their family, still have cash out needs for some of these borrowers. I talked to somebody that had their kids going to college, look at how much they're going to be, right? Maybe that's where they get it from because they have really a lot of untapped equity and they need that. And another time we can look at, I think if you do a loan today, just looking at how way the bond market looks and some of the economists today is that they're probably predicting rates to go up a little bit like they have a lot this year. But also look at 10-year, they're predicting maybe into the middle, into 2023, rates will come back down where they could be able to refinance. So every loan you do today, it's probably a 2-year loan right around there, and they're able to get a more attractive rate at that time. We're just going to take care of the need today. And then I put on there why Home Express, right? And kind of see there, right? 8 years in non-QM. We've been doing this a long time. Know how to navigate be quick and nimble to change on certain things to make sure we're here while providing confidence to our broker partners out there. So with that, Andre, I don't know if I have questions there, but I'd like to address anything that you guys want to put in there in the chat.
Yes, David, there is one question, and that is, how do interest rates compare with non-QM versus traditional?
Great question. Typically, we're about 150 basis points above conventional rates. That's traditionally, and again, it depends on the parameters of the borrower. It might be less than that if you have a lower LTV, high FICO, and you're going bank statements. Or maybe if the FICO's down, it's 640, might be 200 basis points higher. So it's more risk-based driven on that, how you look at it versus the conventional. But typically, you just use 150. It's going to be in that range.
Great, thank you. I do have another question that gets into the first-time homebuyer topic. So that
Great.
is, I have a first-time homebuyer that does not meet Fannie Mae DTI of 43. They're at 50 DTI. Can they do a non-QM loan?
Great question. We'll get to that. Yes, we have programs up to 50 and maybe even 55 DTI, depending on the residual income. So we have different things on that that could work depending on LTV and that. But 50 we can do, especially if it's a good borrower. Remember, non-QM is a little different. We're not when you go non-QM, it doesn't mean we got low down payment or that. Remember, these are highly qualified borrowers. It's just they don't fit the guidelines, right? First time buyer doesn't fit the guidance out 43. However, they make $15,000 a month, have high residual income, and have assets saved. That's kind of the parameters of what you look at on it. And honestly, all you need to do is reach out when you get through this to our highly trained account executives, and they go and they know how to structure that deal for you. And we're a make sense lender, as like Ray said earlier on his comments, is that we can look at a deal and we're credit experts, right? We're manual underwriting credit experts, to be able to give you an idea of what we can do with that, right? So maybe we can't do that 90, but hey, they have cap. Maybe we could do that 80, and we're going to try to give you options with that, so you can close more first-time home buyers and more purchases, because this is a purchase market right now.
Great. Do you want to keep taking some questions, or do you want to move on with the
Well,
presentation?
I was hoping to take questions that we can get to the first-time home buyers and programs at the end. But are there any questions on the industry today, Home Express? I just want to know. I just want to put you at ease and confidence with us that we're highly capitalized, right? I looked at an article today where I didn't even know that some non-consumers were using 99% of their lines on fundings, and we historically always use 10% of our own funds on it. And so I just want to know we're highly capitalized. We believe in skin in the game, just like skin in the game from the borrowers. That's down payment, those type of things. We put skin in the game on all our loans too, and that gives our lines, our investors, a lot of confidence in there of how we do business. That we're going to be there long term, also for them, because this market's not going away. It's just going to some weren't nimble quickly enough. Maybe didn't do some of the things that we put in. And so hopefully that kind of sets that apart. But I want you guys to have confidence. You sub us a loan, we get your approval. Man, that's we're going to honor that lock and those guidelines that was submitted at.
Great. Thanks, David. I do have a couple questions, but they're not industry related. So let's save those to the end, and then
Okay,
we'll just go ahead and continue.
great. Let's go through some of our differences on that. So purchase market, we all kind of knew that, right? And so I do work credit experts, so we're going to talk primarily about consumer purpose non-QM, but just to let you know, we do manual FHA too. Now, the one thing I tell my broker partner, especially the mortgage banker, we're not here to take any deals that you can do internally. We're here to do those ones where, hey, I got an overlay here, it doesn't work. Who am I going to call? You're going to call Home Express, highly trained account executive, walk you through that. Right. And then I got here. What's the main reason first time home does not qualify on traditional programs? DTI. We had that question earlier. You're right. So I'm going to go through that. Credit score, trade lines. Maybe they had some delinquency. Could be employment history, and then housing history. So kind of look at that where we can fit in where it makes sense to do that. So DTI traditionally is 43, right? Fannie Mae, Freddie Mac, those type of things. We do have non-QM programs to 55 DTI with high residual income. First-time home buyers, we're probably a little more careful of that, depending on payment shock, that kind of stuff as you get towards 50 on that. So we do have programs where it makes sense to that. And again, we take each loan on its own merits. We also have the self-employed where no tax returns, right? So you're going with the 2-year tax returns on this purchase, a self-employed borrower doesn't pan out. We can easily kind of analyze those 12-month bank statements before you even submit the loan. We're going to let you know what that income figures we can use based on the cash flow of that particular business. We also have asset programs like asset in full or depletion. We call them asset express or asset assist, but it's basically just taking assets to your DTI, right? So you had a 50 DTI on that one question we had other. What if they had a 401k balance of 200? Again, it would have been a 400 balance because the economy today is 200. I get all that. But we can use portion of that to supplement that because that's money they can use to qualify on a DTI. So I mean, there's lots of options for you on this to be combined with the regular income to how we'll pass that test right now. And given the rates are 7% in non-QM, upper fives on traditional, right? So we kind of know what that. Other one is 1 year full doc options, right? So what do you mean by that? 2020 was an interesting year, right? I mean, we had the pandemic, we had some shutdowns in certain industries, and their revenue probably was there. I bet you the revenue this year, last year, and this year are pretty good, and we can look at that income on a 1 year full doc option. Plus, and we have programs for 1099, and I've seen a lot of this out there where they had some change of employment 18 months ago. For 2020, they were W-2'd, then they went 1099 doing the same line of work because they wanted to live remote. They didn't want to live in the big cities. They went more suburban areas, right? We have programs for those too. So you might not have a full 2 years of 1099. Maybe you do have that. We're able to look at that where the differences of income for you and build structure that and give you an answer fairly quickly up front, so you can give that real estate agent confidence because you'll know the credit, you'll know the property, right? Really, a lot of the stuff comes down to on this slide is the income and what you have, right? So we can go to the next slide on this. Credit score. I always look traditionally at 680 plus on that. I know you can go lower than that, but honestly, I looked at a deal last month with one of our mortgage partners and had a 672 score. We're going, why are we getting this full doc? Yeah, we put an overlay in at 680. Okay, we got 20% down, full doc, everything meant up, and they couldn't do it because whatever it is, we had appraisal. We closed that deal in 9 days, right? So keep in mind that, FHA2, we do manual. We even have a special right now with no credit. They have no credit, no FICO scores. We could do those as well on a manual basis on FHA if you have overlays on that. Non-QM, right now we have a minimum score of 600 to get in. And again, historically, that's all that's in there. You get below that, sometimes a little difficult. But down up below, kind of highlighted, primary wage earner score used to qualify. So whoever the primary earner is, that's the score we use. So potentially you could have someone under 600, but they're the co-borrower based on income. That's fine. We can still use that income. It also helps when you're looking at deals, they get a higher LTV, get a better rate, those type of things. Okay. Trade lines, we have flexibility. I always go, the number one trade line non-QM likes is housing history, right? Traditionally, if they pay their housing on time, most likely they're going to pay the mortgage on time, right? So things you can look at that. We have life events that we can look at. There's a lot of people that have been around. I've been around a long time, and things happen, right? The divorce, medical things happen, but they're back on their feet, but they just don't qualify for that. But they, you know what? Based on traditional guidelines, let's take a look at that. So do that. We also have housing events that we can look at with 0 by 90 by 12. Now, again, you got to look at the merits of it because we need to make sure our loans, we feel good that they're going to repay. But I've done loans like this just recently where they had a 1 by 60, went through a divorce. Someone was supposed to take it, not. Someone found out, our borrower found out wasn't taken care of, paid it current, paid their housing history current up to our loan, had 30% down. Great job. Well, okay, we can understand things happen in life that, you just don't just happen. And we can look at that and manually detect if this is a good risk or not. So you need to bring all those deals that you can't get done internally and just ask us on it. That's really going to increase your first-time home buyers. And we allow gift funds, right? So gift funds can work for down payment. So we've got lots of options as you go through this. And that's really it. That's really about options for this first-time home buyer. It doesn't fit. We can look at those for you and give you options that you can take back to the borrower to get their new home loan closed. Employment history, right? And I'll just tell you a story. I actually had this call last night from a broker I've known for a long time. He goes, and I tell him I'll take a look at it because I need to see the documentation on it. But I'm just going to give you an example, right? Had a borrower, and this borrower is retired from San Diego County, right? Healthcare worker, retired, moved to the Philippines, got a job in the Philippines as a caseworker there, and had a retirement from the county down in San Diego. Her mother had some medical things come up, boom, so moved back to San Diego about 6 months ago, got a part-time job that went to full-time, so she's been full-time for 3 months, right? And during that time, mother wasn't at health, passed away, that home that they were living in is free and clear, and there's a will on it where there's two other heirs. So the two other heirs wanted to, again, this is someone who's not on titles, first time home buyer, kind of categorized, but needed to pay off the other two heirs and like to retain the house, right? Common thing that happens in life, right? Especially as you get older, like I am, right? So yeah, let's take a look at that employment in the Philippines, whatever you can document that it translates the same line of work doing here. We'll take a look at that. And then again, you're looking at a 55 LTV loan. We got the retirement in that industry, the job that was part-time in that. Well, I tell them we'll take a look at that to see what documentation we have to get that done. Those are real live examples of non-QM. And we're going to bring some of that to our next webinar as well when we get to that slide. So employment history, minimum 2-year history, self-employed, whatever it is, you want that on your 1003 and document that with minimal gaps. You know what? We understand that. We can do W-2. I've seen a lot where their W-2 go self-employed, same line of work. As long as they've been self-employed for 12 months and their managerial supervisory position, we can look at a cash flow of that business. Again, the LTV reduced, but you'll see that those borrowers have really good credit, really good assets built up, right? Again, I already talked about the 1099, but their previous W-2, same line of work. We allow multiple streams of income, W-2 plus they're self-employed because they've been doing that for 2, 3, 4 years, and especially at high inflation, that part-time self-employed thing is probably important, right? And we're able to use that with no tax returns. And then again, our 1-year income doc options. Let's go to the next slide. Housing history, right? This is another one that comes up on first-time home buyers. So I'm going to kind of address that for you. And I always looked at when we look at credit and housing, are they doing the right financial things, right? You kind of know that. You save for your house. They do these things. A lot of individuals looking at that, man, I need to save up for my down payment. Now they go live with their relatives, mom, dad, uncle, whatever, and they save up for some period of time, but they have no housing history. But is that the right thing to do? It is. So we can look at those borrowers that saved up their down payment without any housing history. So that's another thing to look at. Now, if that first time home buyer is using all gift funds and they have a high DTI and a lot of credit usage on credit cards, probably not the right risk to take. But some of them really legitimately do this and you don't have housing history. And it could be self-employed doing this, saving it all up so their tax returns don't work, right? So there's lots of ways to look at it. So you just need to reach out to us and we'll let you know what those guidelines are and what we can do to look at it. So we take every deal by its own merits. Typically, it's a 12-month look back on housing history. Payment shock we look at. There's a lot of ones I saw with less trade lines. And I've seen a lot of deals like this where they're renting for $3,800 a month. I looked at our new mortgage payment, what they're asking. Oh, their new mortgage payment is $3,200 all in. That's impounds everything. So I had negative payment shock. So if they're able to afford a $3,800 rent payment, probably a good risk to take at 3,200, right? So there's lots of things to look at where it makes sense, lender, and we're able to look at that. Let's go to the next slide. So this example is recently closed files, housing history, high payment shock. They had some reserves, right? That's the other thing. They saved up, did the right thing. And again, I mean, I live up in Northern California. Yeah, and it's got high rents there, right? So you could be renting a house in Menlo Park at 5,000-6,000, and you saved up 800,000 for your down payment. You're probably gonna have some high payment shock just because of the high values that are there. And we're able to look at that. They're doing the right thing. So if you added their rent payment plus their monthly savings, you kind of look at that and judge, yeah, no, that makes sense that they can afford that. DTI is above 55, not allowed. We go up to 55, but when that happens, look at the assets. And I look at a lot of 1003s, and sometimes that's blank. So some of the tips I can have for you, tell us the whole story. Try to get as much information as you can, right? Because assets can be used to get the ability to repay a requirement looked at, right? And I've seen a lot of loans coming in. I just had some $1 million loan in New Jersey approved where you go through, the income looked like this, had $1.6 million in assets. We were able to use that as well. Good borrower, had good high net worth, just that we had to use assets to help them qualify for that. Credit scores below 680, full doc purchases 75. I mean, we're looking at all ways to get good loans done for good people that don't fit traditional financing. Purchase properties they've rented with a seller credit of 5%, right? So We had W-2 to self-employed for 16 months, just recently funded here, right? So don't say no on it. Just kind of look at it, make a call, right? Make a call. Obviously, if it's a, you kind of know what it looks like. The non-QM is not looking at unique property. Everybody thinks that, hey, what do we? These are actually real good borrowers where they just don't fit those type of guidelines given their circumstance. All right. So, well, our definition, I thought I'd throw it out there because everybody's got definitions of first-time home buyers. No ownership in real property last 7 years. So that's kind of our definition of it. But we have solutions for you, and I think you'd close a lot more loans just by reaching out to us and finding We'll set you up with a highly trained account executive to go through those scenarios. And we're transparent, right? I get calls all the time. And we just love to do loans for good people. So we're available to answer your questions all the time. We have submit your scenario here on our website. You'll see, hopefully set some marketing things. We just click on submit scenario. We're going to get right back to you, and let you know what we can do. So we'll take the questions now, Andrea, for some of the first-time home buyers. There's some scenarios out there we can look at for you.
Okay, great. Thanks, David. The first question is, does the borrower need to have their taxes up to date?
Good question. I mean, this one probably one off. You're talking full doc. Are we going bank statements again? Our full doc definition is a lot different. I can just use W-2 and recent paycheck stub, and that could be full doc with us, right? But if they have a lot of variable income, might need to look at that. At least get some documentation on 2 years. But you do not need to use tax returns with us.
Great, thank you. The next one, do you allow origination or discount points to be financed?
Absolutely. I mean, that's a big thing right now as this purchase market is. And now, I was talking to our VP of credit. He got this real estate agent that he knows in Boise. And it's like over 30 days it went for, hey, it's a seller's market, you can do this. Now it's a buyer's market, right? And so in the buyer's market, you can probably get some seller credits, right? And so you're able to use that to finance either the broker fee or discount points to get a better rate. So if we're doing a loan at 80, we're able to take that 2 points and put it on top to get the rate lower. So your real LTV is 81.6, but that helps with less down payment on the borrower.
Great, thank you. Next one, how do you look at BKs and foreclosure clients?
A good question. We look at its own merits. When did it happen? Can you really tell historically how it happened? I'm going to tell you individuals that have a whole bunch of Chapter 13s filed, dismissed, filed again, dismissed. That's probably not the one that we want to look at. But if they had a Chapter 13 and they went through it and it got discharged, that's the thing. We actually use the filing date on those. As long as we understand it, get a letter of explanation. Multiple life events are more difficult, but one thing that happens, we just get an LOE, so we understand what happened, and then we can move forward with it. But we actually have programs with settled, right, out of a bankruptcy.
Thank you. Next one, for the 1-year full doc loan, do they still need to prove 2 years in the business?
If it's self-employed, absolutely. Again, the definition of self-employed is, 25% ownership in a business, and most of our requirements on that is 2 years minimum for self-employed. However, we do have a cash flow program, so the same line of work, they're W-2'd on that. So you need to bring that unique scenario to us, and we'll let you know. So I think that might be great. You got the tax return, it's done. Here's when they went self-employed. Here's what they did before that, same line of work. Again, there's a lot of industries that did very well due to COVID, and maybe that's fading away. So we just need to assess the risk that that income's going to continue on the loan here.
Perfect. And that same person had a continuation that I'm seeing now in the chat that you just answered. And it said, can we prove that the client was in the same line of work going from W-2 to owner from year to year?
We'd love to look at that scenario.
Awesome. Thank you. That is all the questions that I have. So Ray, I will sort of turn it over to you to talk about the next month's webinar.
Yes, thank you very much, Andrea, and thank you as well, David. And I hope everyone has a better understanding of non-QM loans, current market conditions, and of course our topic, which is how to qualify more first-time home buyers. As mentioned earlier, these webinars occur monthly, so feel free to join us each month, and definitely invite any colleagues who you think can benefit from these information sessions. We also have these recordings posted on our website. So if you want to look at past recordings, you can go onto our wholesale website and click on the topic that shows a date that the recording was done. Even though there's been some changes in our programs and guidelines, just know that some of the older topics may reflect those changes, but you can always refer to an account executive or contact us directly so we can tell you what the current guidelines are. So our next webinar will be next month, and we have our topics already set for that. I will actually, Andrea, do you have the topic for next month? I know there's a couple of them that we were looking at.
So I'll have David chat about this, but we have bring your scenarios. So what we're going to do is that David Greider and our VP of Credit, Pete Garfinkel, will bring some maybe like around 10 examples, real life scenarios that we've closed. And then for you as a broker audience, if you have some scenarios that you'd like them to address, you can bring them as well. So David, did you have anything else you
Yeah,
wanted
no,
to
that's
talk about?
great. And we're going to have a special guest, and our vice president of credit will be available, and myself. Right, we've both been doing this. I call him employee number 5. I'm like number 6 here at Home Express. But we're going to show you 10 examples of real live loans that we close, and try to show you here's some examples. So when you see that scenario in your desk, you kind of know what you can do with that. And so you're going to get a real good from a credit perspective and maybe from a sales perspective that I bring onto it, and how to get those closed, and what documentation you need, why that makes sense. And we're all here to do that and to show you the deals you have. I said it earlier, right? You probably had loans on your desk you could have done if you kind of knew about some of the products. And that's what we're trying to deliver to you. And it's like seeing it there and then connecting with a good non-QM partner, and then we can get these deals closed for you. So I'm excited to show you those scenarios we close, and then I encourage you all to bring as many scenarios you see over the next few weeks into our webinar in August.
That's perfect. That's perfect. And although we have a calendar set for the entire year, we change our topics based on what you guys want to hear. So we get a lot of requests from our broker community as to relevant topics that they want to hear from us. And so there are times, again, when we adjust our webinar series accordingly. So thank you for that, David. I'd like to thank our loyal customers who continue to use Home Express as their primary non-QM lender. And again, we humbly invite those who are not currently partnering with us to join. So to learn more about Home Express or to view a previously recorded webinar, as I mentioned, please visit our website at www.homexmortgage.com. Thank you. We're signing off. I wish you guys a great day. Again, feel free to contact us if needed, and we'll see you on the next webinar.
Thank you, Ray. Thank you, David. Thanks everyone for attending. Have a great rest of your week, and we will see you next month. Take care. Bye.